Monk, every time there's a major geopolitical event like the Iran-Israel conflict, the news starts talking about oil prices. Analysts say things like oil prices are rising, oil prices are crashing, markets are reacting to oil. But I've always wondered something. Why does oil get so much attention? Why does one commodity suddenly affect the global markets and investors everywhere? That's an excellent question because oil is not just another commodity. It is one of the most important economic indicators in the world. In this video, we will understand why oil prices influence a global economy, how oil affects the inflation and interest rate, and why investors across the world closely watch the oil markets. Once you understand this relationship by the end of the video, you will realize why oil prices often influence the stocks, currencies, and even the economic policy. To understand why oil matters so much, we need to look at how modern economies function. Oil is used in transportation, manufacturing, and energy production. Because of this, changes in oil prices affect the cost structure of many industries. And this is where the link between oil and inflation begins. When oil prices rise, transportation and production costs also increase. Companies may pass these higher costs on to consumers. This pushes the prices higher across the economy. That is why rising oil prices often lead to higher inflation. And inflation creates another major consequence. When inflation rises, central banks may respond by increasing the interest rate. Higher interest rate can slow down the economic activity and affect the financial markets. This is one reason investors pay attention to the oil prices. But oil does not only affect the inflation and the interest rate. Different sectors of the stock market react differently to oil prices. Energy companies may benefit when oil prices rise. However, industries that depend heavily on fuel may face higher costs. And this is why investors monitor the oil prices closely. In many cases, oil prices also reflect expectations about the global economy. If the oil demand rises, it may indicate strong economic activity. If oil prices fall sharply, it may signal weaker demand. So when analysts talk about the oil prices, they are not only discussing energy markets, they are also talking about inflation, growth, and financial market. If you want to understand how global events influence the market and investment, subscribe to the channel because we break down the macro forces that move the global economy.